Welcome back, traders and investors, to Benzinga's pre-market prep, brought to you by MarketFi. I'm your co-host Joel Elconin, along with Brianna Valesky, and I have Russell Rhoads on the line. He's a senior instructor with the Options Institute at the Chicago Board of Options Exchange. Russell, how you doing this morning?
I'm doing very well. I know what -3 feels like when you're walking from the train to work though this morning. It is just awful.
Oh, really? That's a heat.
Yeah.
That's a heat
My,
wave.
yeah.
We're
Goodness
minus
gracious.
13 here. Let's get in that. You had a blog over the weekend, and you're looking at the VIX and the volatility and everything. And what do you? I mean, come on. We're low volatility, right? At all-time highs. Isn't that supposed to mean that we're just going to continue moving higher?
Well, we're actually not that low. The VIX on Friday closed at 1430, which is slightly above just the average last year. And there were a few things that stood out to me just reviewing last week and looking at how things ended up on Friday. One was the March futures are at over a $2.60 premium to where the spot index went out. And there's no real fair value relationship between VIX futures and the spot VIX index, and it's all based on how much risk volatility sellers are willing to take on. And that premium just indicates to me that they're still a little bit nervous, regardless of us putting up 2 all-time highs last week. A couple of other things that popped up in front of me. Again, we went out at 1430, and the average was 1429 last year. So 1417 last year. So we're actually above that, above that just average volatility level when we're making an all-time high. And then the thing that I've probably beaten to death over the past few months, but it's really a dramatic looking chart now, and I'll tweet it after I get off with you guys, and I'll tag you guys in the picture. I've got the average VIX close for the 56 days that we've set a record on the S&P 500 since the beginning of January last year. And the average VIX close on a record S&P 500 day is 1265. And again, we went out over a point and a half above that, almost 2 points above that on Friday. So, and when you look at the picture, it's really dramatic looking. It's like every S&P record day since December 22nd, VIX has been well over 14. So, we're making new highs, but the market, or at least the volatility guys, still aren't convinced that they're going to continue.
How long ago were you making that comparison?
I started making it in the fourth quarter. We had a tough October, and we went almost 6 weeks between an all-time high in mid-September for the S&P, and we put up the next all-time high was on Halloween, actually, on 10/31. And on 10/31, VIX closed, I don't know, about 1410 or so. And it was just, and that prompted me to go, well, this is pretty high relative to what we've seen over the past few months. So I started tracking the average VIX close on record S&P 500 days versus where VIX closed on the most recent
day
record, and it's been since early December where we've actually had VIX under that average.
Yeah, I mean, the only thing, if you were going longer term on that, I would say, well, the market's at higher levels, so just naturally there's going to be more volatility. But if you're only going back to December, not much validity there. Russell, you like to follow stocks during earnings season, and I know you're not huge into technical analysis. You like to look at your fundamental analysis. Tell us what you do about, on earnings season, what you track, and then we'll get you reading on a few issues.
Sure. One of the things we do on the CBOE blog site is I'll take a look at the stocks that have weekly options on them, and there are a couple of reasons that I focus on the stocks that have weeklies. First off, there's almost 300 of them, so any stock that has a very liquid option market has weeklies now. So it's kind of a good way to pare down stocks that have options that you can easily put positions on in front of earnings. The other thing is with having a Friday expiration, you have very short dated options. So If you're trying to play a catalyst, you don't have to worry too much about implied volatility changes or time value coming in there. You've only got a day or two left expiration sometimes. So what I do is I actually look at the 3-year history of the stock's reaction to earnings. Like, for instance, I haven't seen the numbers. I don't know what the stock's doing, but Dish was scheduled to report this morning before the open. So I looked at the 3-year history. The biggest move up was 6%. The biggest drop was just over 4%. And on an average basis, the stock moves around 2% on earnings. And then I start to look at what the option market is pricing in. Is the option market pricing in a lower move relative to history or a bigger move relative to history? And a lot of option traders will take a cue from that when they put on positions in front of an earnings catalyst.
All right, so let's look at a couple stocks that are going to be reporting this week, and have an interesting technical formation here in Home Depot. I see, yeah, that's an interesting from a technical perspective. This stock is just running into all kinds of trouble here around 112 and 112.50, let's call it here. Nice run up. The stock has really gained since it's a bowl of lows. Give us your take on Home Depot.
Okay, well, Home Depot, if on average the stocks move just a little bit under 3% on earnings. So without having without having the quotes up in front of me and not knowing how we're going to open in about a minute or so, if I were if we get close to the close today, and you're thinking about some sort of a bearish trade on Home Depot, first off, whenever you're thinking about a trade with earnings, you've got inflated implied volatility. So you've got expensive options there. It's not the most exciting approach in the world, but typically if I were looking, and this is, we're not going to get Russell in trouble here because I'm not making a recommendation, but let's just say with what you said, I'm taking a bearish outlook on Home Depot. Since the stock normally moves 2.83% on earnings, I would look at buying a put option and then selling a put option that's about 3% out of the money. Making an assumption that I'm going to get the direction right and that the stock's going to move, it's going to have about an average move off of earnings. It's just an approach that I've seen a lot of people take, and that's one of the reasons I put the numbers out there for everybody.
Okay. Also, due to report this week, Macy's.
Macy's does not have weeklies.
Macy's does not have. I find that.
I was kind of surprised too, but they were not on the weeklies list. So and I'm bummed too because my background is actually as a when I covered the retail industry probably more than any other industry. So when you mentioned Home Depot, I got kind of excited there because it's a name I know fairly well.
Okay, Target. How about Target?
Target, where is when are they scheduled to report? There we go, Wednesday before the open. The thing with Target is they had, and this is something else that pops up, and you picked a really good name. Their biggest up move ever was 7.39%, or at least over the last 3 years, and that was last quarter. So one of the things that I have found, believe it or not, traders have very short memories. And if you were paying attention to Target 3 months ago, you're going to remember that really big up move. The average move is only around 3%, but and without having looked at the options at all, I'll bet you that Target options will overprice relative to a 3% move, which will make them even a little bit more expensive. So if you have a directional opinion, that making sure that you sell an option to offset some of that high implied volatility will definitely be something that you want to take into consideration. The other thing is when we had a really big move relative to history the previous quarter, sometimes that actually sets up for a nice neutral trade based on earnings. And what I mean by that is, let's just say that Target ends up pricing in a 6 or 7% move because we had such a big move last quarter. If you just think it's going to revert back to an average move and just have a 3% move either direction, you're probably going to have an iron condor opportunity there.
Yeah, could you explain iron condor real quick to our listeners?
Oh, sure. Iron condor is basically you're combining selling a bear call spread and selling a bull put spread, and the range of profitability, that you'd want to set with something like Target, if you think we're going to have like an average move, would be up or down 3%, because that's what the stock has done in the past. The opportunity to make money off of that will exist if target options, again, are pricing in a much bigger move. So one of the things when I run through this list, and really I just monitor these things out of educational interest, it's interesting to see how the options seem to be overpriced when we've had a big move just on the previous quarter. And it's a big move relative to history. For instance, let's find GoGo Internet, or GoGo in-flight Internet, something that I use a lot. Their average move off of earnings is just about 10%.
Wow.
And last quarter they moved 10%. So that's a big move, but it's a normal move for them. So it's not quite the same as 7% relative to 3%, like with respect to Target.
Yeah, I'm looking at GoGo here, and someone's saying no to GoGo here at 1650, a high at 45 today, 46 on Friday. So big level on that issue. Another retailer, I don't know if there's weekly options on it, but if you want to see one of the prettiest charts ever, TJ Maxx, TJX.
Oh, unfortunately, that one didn't show up on here.
Okay, all right.
But you know what I'm going to do? You mentioned TJX, and what was the other one you mentioned?
The other one I mentioned was M.
Macy's. You mentioned Macy's.
Yep.
Without weeklies. What I'll actually do is I'll go grab those numbers and I'll just tweet them out, and I'll tag you guys on it.
I thought you said that. I thought you were going to say that they're going to be trading weekly options in Macy's and TJX on Monday.
No,
Monday.
They don't.
You don't have that much influence over there, Russell?
I don't have any influence like that.
You're a senior instructor.
As I was instructed to say once, those kind of decisions have not reached my level of the organization.
Well, maybe they should. Before we let you go, what a few new things starting up at the SIBO this week, expanding some trading hours.
Oh, yeah. Vic, actually, starting next Monday, it's pending everything getting in line, but it looks like this is going to happen. Starting next Monday, VIX options will begin trading at 2 o'clock Chicago time, 3 o'clock in the morning New York time. And that actually overlaps with European market hours. And then a week later, we are scheduled to start trading SPX options at 2 a.m. Chicago time. And typically the market makers in those two markets use VIX futures and S&P futures respectively to hedge themselves, and those are already pretty active overnight markets. So it looks like, at least from the market maker standpoint, we should have a fairly liquid option market for those of us that want to get up at 2 a.m. and start trading.
And you got any plans for the weekend? Traders Expo.
Traders Expo is in New York. It's usually President's Day weekend, but we got bumped due to the NBA All-Star Game. And I will be speaking I think I'm teaching for almost 6 hours straight on Sunday afternoon. I'm actually going to be talking about how to use the earnings list to trade weeklies, and then strategies around SPX and VIX as well.
Okay, we'll keep an eye out for Kyle Stazzy-Bazzy. I think he's going to be out there for that,
okay.
representing Benzinga. So we've been on the line with Russell Rhoads. He's a senior instructor with the Options Institute at the Chicago Board of Options, cluing us in on some of the things that he likes to look at during earnings season. Great information, Russell. Thanks for coming on. We'll speak to you again soon.
You bet. Thanks for having me.
Okay, 9:36 here. Markets are open. Let's just follow up. S&Ps did just touch that pre-market low. We're in at 2101 and a quarter. We matched that to the tick and getting a little bounce. So far pre-market low. Holding up in today's session, we are only 7 minutes into it.
Joel, I do want to answer. Rob Hood had asked in the chat where Russell finds the data on price moves during earnings, and I think it comes from them looking at their own trading activity within their within their system. Yeah. So I just wanted to address Rob Hood's question because we didn't get to that while Russell was on the air. Do you want to take a look at some of our stocks that we mentioned before the open? Of course, we should take a look at Dish, see how that one's doing.
Okay, Dish Network here, trading up here. Let's just take a look at the quick technicals in Dish Network. Good earnings from DirecTV last week, but I think that's one's getting taken out. Moved to new all-time high here. Opened near the open. Could have bought it off the open up 50 cents and taken relatively little heat. New all-time high at 80 bucks. Not sure big round number like that. I don't know if there's a big seller or not, but so far 80. If you're looking for a gap fill, you still got another 40 cents to do on the downside between the current low 78.94 and Friday's high at 8.54. Also, if you're trading this thing intraday, buck range, you know me, I'm looking to hold that 79.50 to keep the daily uptrend intact.
What about SPPI, our loser of the day, Spectrum Pharmaceuticals? Let's just take a look at that real quick.
All right. This is one that Dennis and I agreed on and really doesn't happen very often.
It does not happen often.
But let's see here. I mean, it did really get shellacked in after hours. I mean, real negative news. And I guess it really wasn't something that you really needed to rush out. But I guess, yeah, it even did take out the resistance that we were talking about, 560. Well, first of all, pre-market low was way down at 460, and then support started to move up. Now continuing, you had a little resistance, 560, carrying on here. Really hard to find an intermediate point between now and Friday's low. That's way up there, but a little bit overdone. The pre-market probably got some happy shorts out there covering. Intraday low 565. I keep an eye on that if you're trying to play it from the long side on a swing trade.
I do want to take a look at HSBC.
Uh-huh.
I think this is one of those banks that's in trouble for its Swiss operations right now, if I remember correctly. Let me double check on that though.
Well, they're in trouble in stock price, so that's all we care about, right? Price don't lie. HSBC trading down here pretty substantially and had a gap lower. I believe, is this ADR here? HSB Holdings PLC. You had a gap down here, 44.36 open. Got a little bit of a bounce, but not much. I'm keeping an eye on that 44.26 low. Haven't been under $45 here since you hit 42.85 back in September. Really keep an eye, 44.26. I don't think I'd want to be long that if you take that out on the downside.
What about some of our imbalance names that Dennis had mentioned?
Yeah.
Coca-Cola, 277,000 to sell. What's that doing right now?
Let's go to Coca-Cola first. That was the big one was Pfizer. We'll go to that in a second. Coca-Cola. Let's see here. Open, yeah. If you were now, see the thing with the sell imbalance is you don't want to be selling on the open. You want to be buying on the open, maybe selling ahead of time. That opened within 2 ticks of its low, 41.71 with a 41.69 high. It rallied up, so if you were fading those imbalances, you were doing good. Also, I just wanted to look at Pfizer, and we had a double bottom, well-defined support level of that. I know it was 650 to 1,000 to sell. That's a pretty substantial order. Boom. 34.10, 34.11, your last two highs. Open 34.11. 34.06 low, so you shook out the bids there, and a nice rally here. So I hope Dennis did okay on those sell imbalances.
What about CyberArk?
I knew you were gonna say that.
I like CyberArk.
Yeah, you like CyberArk. So does Sean Udall. He liked it at $40, but let's just take that wild child. We got a lot of input from Anne Marie Ban, one of our guests on this, and you do have a red bar here. You got the lower open. I think there was a downgrade on that. Let's see, 60. This did open up big range here. I guess I can't get real bearish until we take out Friday's low at 64 even. 66. We're on the lows. I mean, I just don't see any support in this thing until 64.
Dennis is saying he did buy Pfizer, and he did well. So
yeah, okay. All right. So he'll be in a good mood tomorrow. Okay, that's good. Well, he's got the rest of the trading data to contend with. Well, it's 9:42, so we have a few minutes left, but we got another great show lined up tomorrow. Brianna, why don't you tell us what we have? in store?
You got it. Well, Tuesday we will start off with Nick Shaheen. He's our options expert, and he joins the show every Tuesday to discuss this week's options outlook. Then we'll have Todd Schoenberger. He's the president of J. Stryker Asset Management. And then Nicola Duke will be on the show. She's an analyst for futures techs. Just a final reminder, our show is brought to you by our friends at Nadex, where you can find protection from market spikes and opportunities in flat markets using binary options. Open an account today with no fees and only $100 as your minimum deposit. Tell them your friends at Benzinga sent you. If you miss any part of today's show, you can listen to the whole thing again on our podcast. Find us on iTunes, SoundCloud, and Stitcher by searching hashtag free market. Don't forget to tune into our next special segment all about crude oil this Friday, February 27th, where you can discover the most profitable investments in the energy sector right now for free with experts Doug Cass, Dennis Gartman, and many more. And again, if you liked hearing Scott Redler's daily take on the market as well as his key levels, subscribe to the Redler All Access and get his morning note, private Twitter feed, and daily video. Look for the link that I'm going to drop into the chat room right now where you can get more information on that and figure out how you can get $101 off the regular price. Finally, please always remember that all of the information, material, and content in our program is for informational purposes only. Investing in stocks, options, and futures is risky and not suitable for all investors. Please consult your own independent financial advisor before making any investment decisions. Okay, Joel, that's my mouthful. I'm going to give it back to you for some final words of advice for our traders.
I just want to take a look at a couple stocks that we highlighted, a little bit of follow through from Friday. Noodles, if you got noodled in that on Friday, potential double bottom here. 1885, you're low on Friday. We hit 1888 today off the open, so maybe everybody that's selling noodles is out, but keep an eye on that level, especially if we sneak back down under 1890. Also, I want to see what Home Depot's doing because we were talking about all that resistance here, and I don't know if it had a big buy imbalance or what, but this thing opened up at 112.99, kickstarted over 113 here. I got to 113.56, and then that area we were talking about as resistance has turned out to be support here as you made a 112.52 low. Well, we're going to wrap things up here with the S&P futures trading near the lows of the pre-market session, 2101 and a quarter. Remember, you still have some good support of that 2100 level, and just below it, as that was the area of 3 or 4 highs from last week. So keep an eye on those levels. 2107 all-time high close in the S&Ps, all-time high price 2108.75. Have a great trading day. Hope you enjoyed today's show. We'll be back with you tomorrow morning.